I've gone to about 15% liquidity on my resource stocks. I did call at the very top to the day, and I've sold a fair chunk, 20% of my physical silver. Now, do you happen to recall in March of 2020 what happened to the price of silver?
March of 2020. I don't
Yeah,
recall, but I can look it up.
that was the COVID crash. Okay, it actually went down to $12 an ounce. But if you bought the SPAT silver ETF, you could buy silver at $11 an ounce.
Bob Moriarty demonstrates sharp market foresight through disciplined liquidity management and timing. By reducing exposure to 15% in resource stocks and selling 20% of his physical silver at the precise market peak, he exemplifies strategic caution amid volatility. His approach reflects the importance of preserving flexibility when uncertainty dominates market sentiment. Recalling March 2020, Moriarty cites how silver plunged to $12 an ounce and even $11 through the SPAT ETF during the COVID crash. Yet, within months, prices soared to $30, rewarding those who acted decisively when fear prevailed. According to Bob Moriarty, such moments reveal timeless lessons. Volatility is not a threat, but an opportunity. Investors who remain analytical and patient, rather than emotional, are best positioned to convert temporary downturns into lasting gains and capitalize on inevitable market rebounds. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Well, that's a fair question. It's a good question. I've gone to about 15% liquidity on my resource stocks. I did call at the very top to the day, and I've sold a fair chunk, 20% of my physical silver. Now, do you happen to recall in March of 2020 what happened to the price of silver?
March of 2020. I don't recall, but I can look it up.
That was the COVID crash. Okay, it actually went down to $12 an ounce. But if you bought the SPAT silver ETF, you could buy silver at $11 an ounce. And that's the only time I've ever invested in an ETF because I thought it was like stealing. And from March of 2020 until October 2020, silver went from $12 an ounce to $30. And we could see it again. I'm not going to say silver is wildly overpriced, but I do believe gold is absurdly priced. If you compare the price of gold in any period in the last 100 years, it's gone up more than any metal. It's gone up more than postage stamps, gone up more than automobiles. It's gone up more than trophy wives and a correction. And I am bullish long term, but I am bearish short term. The big move in dollar terms and percentage terms was in silver. And let me point something out. The Dow Jones top in the first week of September of 1929. The crash was in late October. And from September of 1929 until July of 1932, the Dow Jones was down 89%. And there appears to be a level anywhere from 85 to 95%. When you get that kind of a decline in anything, you will have a 150% return. So between 1932 and 1933, the Dow, I think, went from 49 to, I think, 108, but it went up 150% in 1 year, in 11 months. So if we have a liquidity event, if everything gets wiped off or wiped out, okay, it could be a marvelous opportunity for those who are contrarians who understand history. So What we're saying is we don't know what the problem is. We see all these signs. However, it could be a wonderful opportunity if all the markets crash. Okay, from a mathematical point of view, if gold can go up an equal number of days to going down over 9 weeks, okay, if it goes up 9 weeks in a row, you've got 2 to the 9th power, which is 512 events. So it would be 511 to 1. Now, those do happen every 10 years. However, we had an extraordinary event that ended, I think, on the 17th of October, and a correction would be a normal, natural thing. There's some subtlety that most people miss. The Chinese government have just introduced a change in their tax law that if you're buying gold from the Shanghai Exchange, which is a physical exchange, you don't get a tax break that you did get prior to November 1st. So there's a lot of indications that people are stepping on the price of gold and silver, but that would be perfectly natural after going up 9 weeks in a row. If there is a crisis in silver, it's not a crisis of price, it's a crisis of location. If people are trying to get 400 ounce good bars, not 400 ounce, 1,000 ounce good bars in London, there is a shortage there, but it's a shortage that can be made up from the United States. And in fact, another thing the Chinese did, you now have to have permission for any shipments of silver out of China. So I'm not sure what the event is that's 90% hidden, but something's going on.
According to Bob Moriarty, recent market movements signal a cautious yet opportunistic phase for resource investors. Having reduced his liquidity exposure to around 15% and sold nearly 20% of his physical silver, Moriarty notes that while gold appears historically overvalued, silver holds stronger potential for future gains. Drawing parallels to March 2020, when silver briefly plunged to $12 per ounce before tripling within months, he emphasizes that short-term volatility often precedes exceptional buying opportunities. For strategic investors, this pattern highlights the value of patience and contrarian positioning in times of market stress. Bob Moriarty further compares today's conditions to the 1929 and 1932 market collapse, stressing that severe downturns can yield substantial rebounds, sometimes exceeding 150% within a year. He points to China's recent tax and export restrictions on gold and silver as subtle but significant market signals suggesting temporary price suppression. According to Moriarty, these interventions, combined with tightening liquidity and logistical shortages, indicate structural pressures rather than fundamental weakness. A correction, therefore, would not be a collapse, but a recalibration, offering disciplined investors the marvelous opportunity to re-enter precious metals before the next major upcycle.
On Friday, the Fed put $29.4 billion into the reverse repo market in one day. There is a meeting in India tomorrow talking about some kind of liquidity crisis. There is something going on somewhere, and somebody's about to crash big time. And because the AI space and Bitcoin are the biggest bubbles, that's what's going to go down. Now, strange enough, I don't think COVID had anything to do with it. The problem popped up in September of 2019, and COVID was a handy excuse, but there is a crisis in liquidity across the world right now. The UK is functionally bankrupt. France is functionally bankrupt. Germany is functionally bankrupt. The United States is going it's going $500 billion deeper into debt every month, and that was under a president who was elected to reduce the cost of government. So something bad is going to happen. Here's what I'm saying. We're seeing indication after indication after indication that there is a problem. Now, I can't tell you what the problem is, but the CDS on Oracle is showing at the $29.4 billion into the reverse repo market, showing it. The Central Bank of India showing it. Actually, because gold was up 9 weeks in a row on I think the 17th of October, I said gold and silver were going to correct, and I nailed it to the day, and several other people did. Clive Maughan did, and gold and silver and the shares were due for a correction. And while it plunged at first and it stabilized now, I believe the next move will be down, and it's going to be the inverse of the US dollar. I think that we're going to go back to the old days of, in a crisis, everybody wants to get in the US dollar. So that's what I think is true. But the value of the dollar, or the credit default swap, the Bank of India, all of these things are saying something bad is happening. In a liquidity crisis, people sell everything for exactly the same reason, because they can. So gold could take a tumble, silver could take a tumble, Bitcoin could take a tumble, oil has already taken a tumble. Oil is more a predictor of geopolitical events in the Middle East. Okay, that says the chances of a pending attack on Iran are fairly limited right now. Now, we should talk about Ukraine. Ukraine is literally losing the war as we speak, and it's going to be real obvious to everybody in the next week or two. Yeah, but so what? I mean, we know the debt-based system of the West is collapsing. I talked to you about that book by Emmanuel Todd, The Decline of the West. BRICS is gaining power. The balance of power is shifting to the East and to the South, and that's something natural to happen. We were talking off camera about how screwed up things are in the United States now. And actually Western Europe, the same thing's true. You can't get anything done. Nothing works. Government doesn't work. If you're in the mining business trying to get permitted, we posted some really good stuff in the last week or two. And now it turns out that the 73 vaccines that kids have to take are so we've got a situation where the banking system doesn't work. Big pharma is corrupt. Politics is corrupt. Literally on Saturday, food stamps stopped being paid. And that's a game between the Democrats and the Republicans of playing chicken. And I'll be candid, if you got 42 million Americans on food stamps and they go for a month without food, we will have Mad Max as our new president.
Global markets are flashing warning signals of an approaching liquidity crisis, with central banks injecting billions into reverse repo markets to maintain short-term stability. Several major economies, including the UK, France, and Germany, are functionally bankrupt, while the United States continues sinking deeper into debt each month. Isn't it alarming how the very nations that built the global financial order are now struggling to sustain it? As liquidity tightens, traditional assets like gold, silver, and Bitcoin could face sharp corrections, echoing historical patterns where panic forces investors to sell everything they can. Meanwhile, geopolitical and structural imbalances, ranging from Ukraine's weakening position to Western political dysfunction, underscore a shifting balance of power toward the East. The system appears stretched, and another global financial reset may be closer than anyone admits. If you found this information valuable, make sure to hit like and drop a comment below with your thoughts. Don't forget to subscribe and turn on notifications so you never miss the latest updates. Thanks for watching.